Hey everyone, welcome in to another daily editorial here on the KE Report. We're going to be talking trading and how to play this broad market pullback, some other opportunities that are presenting themselves in this market environment in summer, as we are chatting with T.G. Watkins, Director of Stocks at Simpler Trading, also editor of the Profit Pilot website, which we will link to in the show notes. TG, last time we chatted was mid-July. You were outlining some opportunities you were seeing in the small cap sector after the markets just started to roll over. Ever since that time, well, we've seen more of a rollover in the broad averages, including that yen carry trade day where we saw a big pullback on that Monday. It was actually preceded by a few other larger down days, but the markets have bounced back throughout last week, taking back a lot of those losses from Monday. How are you viewing these markets, TG? Was that a buy the dip opportunity?
Yeah, so let me kind of walk through a couple of those things. I will say that I think this whole yen carry trade and the reaction to it, how the market is behaving, seems to have been a bit of a surprise. When we left off last time we spoke, the IWM was like sky high and looking great, and I was like, yeah, small caps and all this kind of stuff. And basically, the day after the FOMC, it was a Thursday when the markets really started coming down. I could see across the board that everything was getting sold. Internals were super weak. We went to cash, like all cash as of that Thursday, which was a great decision, obviously, once you see what happened here. And so my really bullish thesis and sentiment kind of went up in smoke, but that's okay. We were still profitable on quite a few things. We cashed in on those things and then just let things kind of figure themselves out. I didn't know that Monday was going to be quite the gap down. Otherwise, I might have traded it to the short side. But yeah, once you saw something like that where you just get this massive gap, yeah, most likely that's going to be a buy the dip situation. And we did that. We bought the leverage ETF of the FANG stocks, and then we bought same thing with the IWM because I wanted to test and see how they worked. And I just cashed out this morning 10% on the FANG stocks and scratch trade on the small caps. And so it kind of tells me, I think that this is more just a bounce and a downtrend. So yes, it was the low. Yes, it could be a buy the dip, but I don't think it's the dip, right? I think it's a dip, and it provided the bottom for the period of time. And I don't know if we're going to revisit it exactly, but I don't see anything that tells me that we are confirmed long trend yet. Like, hey, let's go swing long. I just don't see that yet. And kind of the thing I'm looking at, because a lot of people ask me, like, well, how far is this going to go? What I'm looking at is the put call ratio and the 50-day breadth indicator. And both of those we're at their extremes, and they need to cycle back to the other end of each other. And we're only halfway through. So the put call ratio was like at 0.65, and we need to at least get up to one or maybe a little over one, and we're halfway there. The 50-day breadth was at zero point 0.8, so 80%, and we probably need to get under 30%. And I think we're at 40 or 50 right now. So I think we've got some more volatility and some more downside to go. And we'll just kind of have to see by then. It's a moving target at this point.
Well, TG, in addition to the 50-day breadth indicator and the put call ratio, I know you like to utilize different moving averages. Are there any moving averages you're looking at on either the daily or the weekly that you think are germane as far as support?
Well, the S&P pulled all the way back to its monthly 10. That is the first thing that I would be looking at. Originally I was looking at the weekly 21, and that was on that Friday. But then, of course, Monday opened up going way below that, so that became a non-issue. But otherwise, yeah, the S&P has pulled all the way back to the monthly 10 and basically fixed the gap that we were seeing on the monthly chart for the last 6 months or more. And so I'd say that's kind of a beginning. We'll just have to see if we retest it or not. I mean, we're only 12 days into this month, and so that monthly candle hasn't closed yet, and there's a lot of action that can happen underneath. That's really the only one I can see right now. We are underneath the daily, we're underneath the weekly 21. The hourly 50 is still in a very sharp downtrend. We've got a lot of work to do before we can really figure out where this thing is going to get back on track.
So timing is always hard to predict, but I do have to ask you, when we do have a correction that is this quick, and when we see the markets down 4 weeks in a row, what does that mean? How much longer could this correction last?
Well, again, I kind of look at those two indicators, the breadth and the put call ratio. So, yeah, you would think that the fact that this came down so quickly, we would also be quicker to repair it. That might be the case, but we're just not there yet. Those indicators haven't cycled to their opposite directions yet. And really, this is just kind of the first major bounce off the lows. and we just have more time. I don't really know exactly what that is, but I keep watching the tools and the indicators, and they'll kind of tell me a little bit more as we get closer to it when they start shaping up. But I think it's going to be a little bit. I don't know if it's going to be months, but I think it's going to be a few more weeks till we really get all this shaken out.
Well, TG, when we talked last time, we were talking about the small cap stocks, and you mentioned you just tried two trades where you did the FANGs, but then you also did the, I guess, the small caps or the Russell, and it seems like the FANGs did a little better. But you had also mentioned off mic that you do anticipate eventually, when there's the next leg higher, that there may be a honeymoon phase for the small cap stocks. Maybe get into that with our listeners.
Yeah, this is kind of just a theory of mine. We'll have to see if I'm right or not. Again, so don't put too much weight into this. But I am, since I think that this is a correction, I don't think we are entering a new bear market. I don't think things are going to fall apart entirely. I think that this was an unwinding of a trade that big funds were in, and they got caught a little bit surprised, and all the math changed, and so they had to redo and recalibrate things. Plus, if you just look at the technicals, the put call ratio and the breadth were at their extremes. So it kind of makes sense that the market needed to pull back. It just got some icing on the cake while it was doing that. So, with the overall premise that I do think we are still generally in a bullish market, these things haven't totally collapsed and fallen apart yet. I'm wondering if there is going to be, just kind of using the phrase, a honeymoon phase, that whenever they do start cutting rates, which probably September, and before the economy is actually officially in a recession, before all this kind of catches up to the recession and like everybody knows that we're having problems, I would think that the cutting of interest rates is going to be bullish, and bullish for small caps, bullish for this. I mean, I think that's part of why the IWM did start going up in the first place. It just then got kind of swept up in the technicals and swept up in the carry trade situation. And so if we can recalibrate from everything that's happening right now, stabilize, and then the economy isn't terrible yet, and then they start cutting interest rates, there might be this, as I said, honeymoon phase to where we can actually have some bullishness for a while until all the bad things start to catch up, right? It's just a thought, a theory. I'm going to kind of have that as my background idea and see if I can start figuring out when that's going to happen.
Are there any sectors out there, TG, that can benefit from that honeymoon phase, but you also see as potentially providing some sort of protection if, let's say, that honeymoon phase takes longer to develop?
Well, for right now, I'm in cash, so I'm just kind of waiting for that to set up. And if it doesn't really set up, then it doesn't set up. But I have been hearing a lot of people are looking at dividend stocks, basically, yeah, protection in that way, and trying to find where kind of a little bit of flight to safety. I would think that eventually the mega caps, the Magnificent Seven, are going to be a decent place again. And when we see those small caps take off, we're going to know. I mean, we definitely saw the IWM setting up and then it took off. We caught that entire move and got out before it came back down. And so, yeah, we'll see it again. But otherwise, yeah, it seems like people are kind of looking for old names, dividends, something a little bit safer and protected until we kind of can figure this area of the market out.
Well, TG, let's also pivot over to gold. That's another safe haven. It seems to be holding up pretty well. How are you looking at gold and also the gold equities?
Yeah, gold is actually doing pretty well. I'm impressed that it's pulled back and was holding the daily 50. I was a little concerned that it might need to do a little bit more of a pullback underneath that, but it seems to be holding, it seems to be doing well. If you look at something like silver, it did need to pull back more, so it sliced through its daily 50. And it talk about levels again with the markets. The silver has pulled back to its monthly 10, which looks like another pretty good area that I would think of. That's kind of why I'm like, oh, I'm surprised gold is doing so well. I know they trade differently. I know gold is kind of more the flight to safety, and silver has all these other kind of components as far as the economy and stuff that's involved. But I do think that they're both definitely in bullish uptrends. It's just a matter of like, okay, how far are these things go and for how long? But they're definitely in bullish trends, which also, if we take a look at GDX, it did have some pullbacks. I'm looking at now back basically to the monthly 10, it's into the weekly 21. It did dip below its daily 50. That's why I kind of thought that maybe gold would do the same thing, but now it's back above its daily 50. So they seem to be doing okay. Just needed to take a little breather.
So as a trader, TG, would you rather get into, let's say, a leveraged gold ETF that plays simply the gold price, or do you see something like GDX providing that potential leverage to a stronger gold price?
Yeah, so I mean, if this sector is going to move, the leverage ETF of the GDX is going to be better, but it's going to pay more. But it's also going to be riskier because are gold miners. They're stocks of companies. They're not the actual underlying of gold or gold prices. And so if the market ever gets into trouble and margin calls like we saw and other people get in trouble and the market goes down, They'll sell anything that's not nailed down, they're going to sell it. And that is also GDX because they're stocks of companies. So it's great when things are fine, but when things start to not be fine, GLD or anything related to gold itself will do better. So you're kind of, that's that trade-off in the market, right? Higher returns, more risk. That's where we're going to be on those equation between the two of them.
Well, TG, let's also pivot over to what people call digital gold, Bitcoin, and the cryptos. I'd like to get your thoughts on how they've reacted, because they reacted different in the sell down than gold did. How are you reading something like Bitcoin?
Well, I wouldn't relate Bitcoin to gold very much. I know a lot of people keep looking at it as a protected or safe asset, but it isn't. It's extremely volatile. It is trades a little bit more like a small cap, and it's kind of its own beast. So I can't say that I'd be looking at it for a hedge against anything. I do think it's going to be sensitive to things, and I think we saw that it is interest rate sensitive, and during recessions and during market downturns, it is going to be sensitive to that. The only kind of conclusion I can make on this recently are two things. One, basically it's a security, it's a stock, same with the miners. They got caught up in the market downdraft and the carry trade unwind, all that kind of stuff. But two, it was very bullish. I think it was last week or so going into the Bitcoin conference and having Trump speak there, and there was a lot of energy, and it felt like one of those kind of buy the rumor, sell the news type things, or get everybody hyped up and the inside players are going to sell to the retail that comes in and thinks Bitcoin forever. It just kind of had that feeling to it. That being said, Bitcoin itself, in my view, is still just in a flag pullback. Like it did have a big move. It recovered a little bit. It's still above the monthly 10 SMA. It's still above the weekly 50 SMA. It's still just consolidating. Hasn't broken down yet, hasn't broken out yet, and it's still just very noisy. Now, the Bitcoin miners, they have had a little bit more trouble. A lot of them actually did break significant levels, and it really did move down significantly. Like CLSK has really broken down out of its, I don't know how many months this thing was going sideways. Yeah, so the miners are not looking great. And I guess that goes back to what I was saying about gold miners versus gold. When stuff hits the fan and people need to sell and they get margin calls, they're going to sell anything they can and anything that's not nailed down. And I think we're seeing that kind of phenomenon in the Bitcoin miners as opposed to Bitcoin itself.
So TG, since we are in this time of a bit of indecision, right? The question of how long this pullback will last, if that recession is going to come earlier rather than later, when the Fed is going to start cutting rates, is there an opportunity to play volatility through all of this?
Oh yeah, absolutely. So a nice little tee up there. But yeah, I have been working on day trading 0 day to expiration options. You guys might hear them as zero DTE kind of stuff. And I actually just put on a 3-hour class Saturday, so 2 days ago. And we have a couple more follow-up classes later today and next week. So if anybody's interested, we're still running that special in that program if you want to come in and watch the recorded class. I'm amazed at what I've been discovering. I've been a stock trader my whole life, and I work at Simpler Trading, which is basically all options. And I've just really never succeeded and did well with swing trading options or monthly options or anything else like that. So I was kind of hesitant to get to even look at this 0 day stuff. And then I started doing it. I was like, oh my gosh, I had no idea all the gains that are possible, the smaller amount of risk, just how much this stuff can move in a day. And all I'm doing is I'm trading the S&P. I'm not trading any stocks. It's just day trading the 0 day options on the SPX. And it's just been eye-opening. It really has been amazing. So we've had some really good people give good compliments and everything that we've been doing. And so, yeah, that's what I'm doing. So if you guys want to check that thing out, or, anybody kind of been curious, come and trial out the Moxie room. And we're knee deep in this right now. And it's just been incredible. And I don't mean to be tooting my own horn. It's like, I'm actually surprised myself as to what this has been doing. And I've been doing it for the last 4 months, starting from nothing as far as day trading options. And now I'm 4 months in and we're actually doing really well. So, yeah, if you ever had troubles and kind of curious, this is the place to be.
All right, TG, always great chatting with you and fun to follow up on some of the recent calls that we've had because of the volatility that we're seeing and some of the swings in the markets. Everything was looking almost too easy heading into this third quarter. Clearly markets have rolled over, but we're also seeing opportunities in other sectors too. So going to be fun to follow up with you in a few weeks. Again, we'll post a link to the Profit Pilot website in the show notes. Also check out the Simpler Trading website where you can follow along with TG, get in some of his live trading rooms. TG, thanks again for your time, man. Have a great rest.